Thank you so much for joining me, Victor.
Thanks for having me.
All right, so today's the D-Day for the banks. CBN has earlier said that they were going to be monitoring this coming from tomorrow.
Yeah.
How much do you think is going to impact the markets, though?
Well, first of all, I think this is, just part of, again, CBN's drive to sort of, grow the real economy. So the idea basically is to have banks, as opposed to packing money in government securities, lend more to the real economy that would essentially spur growth. At the time this directive came in July, a lot of people thought that it was, the window with which the bank had time to implement was sort of short. But I think that we've seen some strides over the last couple of months. I think just about 8 banks were below that threshold, and suffice it to say that it's actually mostly the tier 1 banks that are, below that threshold. So I think that, just taking guidance from, management of these banks from their H1 results, you would see that there's been some concerted effort towards, growing those loan books to ensure that they are within that regulatory limit. So I think that come later this week when those assessments come out, I want to believe that, most of the banks will certainly be beyond that threshold. Now, as regards to, its impact, on the market, I really don't see a significant impact in terms of that. For whatever the sentiment is, I believe has been significantly priced in. From a liquidity standpoint, the impact, as far as we're concerned, is not significant. Seen as, the headroom that the banks needed to get to the regulatory requirements wasn't really significant. So it just basically needed the banks to, grow their loan books. Again, what that would basically mean is it reduces the ammunition, again, with which the banks are able to sort of participate in the money markets. In terms of the impact, really not significant.
Yeah, but some analysts will also say that some of the tier 1 banks are already very close to that ratio already. All right, now let's move on. So today is the final day of the third quarter. I'd like to get your fair assessment on how this quarter has been for the money markets and also what you see going forward for Q4.
I think it's been if you track back to even from Q1, Q2, and you also look at Q3, you basically see the market that has been pretty much dictated by some of the policy leanings or postures of the Apex Bank that has basically led to or driven the movement in the rates and the yields that we've seen within the money market. For instance, in Q2 there was the SDF policy for the banks, which basically put out some more liquidity in the banking system. So in Q1 you had Treasury bill rates averaging around 13.2, and that came down in Q2 to about 12.1, and that was basically on the back of a little bit more liquidity in the system, triggered by that SDF policy. Now in Q3, what you're seeing is, we saw some pressure on the currency. And before Q3, we had seen rates drop. So moving into Q3, pressure on the currency, we basically saw the Apex Bank start to push those rates back up again to ensure that they stay attractive and to sort of ward off any potential currency challenges or currency issues that might be down the road. So basically, we've seen these rates move whipsaw fashion, dictated really by the policy leanings and postures of the Apex Bank.
All right, then let's look at the markets now. We're looking at the likely PME and OMO maturities coming in this week, to the tune of about over 540 billion coming in. Liquidity has always been an issue in the markets quite recently, but how do you think it's going to impact things going forward?
Well, I think the Apex Bank will basically maintain its liquidity management stance that we've seen over the last fortnight thereabouts. We're certainly going to see an OMO auction that will most likely take out a lot of that liquidity, a lot of the OMO maturity that's going to come through later this week. Last week we saw the OMO rates on the 1 year drop slightly from 13.50 that we had seen previously to about 13.48. So there was a slight drop there. Maybe the Apex Bank signaling that they are not probably going to take it higher than it is right now, or signaling that they are comfortable with where things are right now. Again, you would need to see how the market will react to that. Whether the market is comfortable at those levels, giving money to the Apex Bank is something else that would see. But in terms of how the week will pan out, I think we're just going to see an OMO auction that would essentially sort of roll over the maturity that you're seeing, and then in terms of rate movement, I don't think the CBN is going to do anything either symbolic or drastic in terms of moving the rates.
All right, but looking at yield movement, though, and also vis-a-vis how the CBN's interventions have been in the market, how do you think it's going to be? They're going to maintain status quo in Q4?
Well, I mean, you have to consider the sort of maturities that we've got coming through for Q4. I think the key issue or the major mandate for the central bank right now is to number one, try to ensure that inflation stays within manageable range and try to rein that in. Unfortunately, there are a number of factors that are beyond the control of the Apex Bank that will probably see, continued pressure on that inflation number. And the other mandate they have is to ensure that, prices are stable in terms of the exchange rate. And that's a key mandate that the CBN has to sustain, because if you cast your mind back to 2016 when we had a currency issue, it had a debilitating impact on the economy as a whole. And I'm sure that the CBN will be doing all that it can to ensure that we don't have a repeat of that. And that is why, towards the end of Q3, you've basically seen, the Apex Bank, push those rates back up. The idea, again, is to ensure that Naira carry remains, significantly attractive for, foreign investors, because what would happen if you've got a lot of maturities coming through in Q4? I think the key thing is the Apex Bank will want to ensure that a lot of the foreign investors are able to roll over, or are actually incentivized, to roll over. So I think that will be paramount, at the back of the minds of the Apex Bank, to ensure that, a sizable amount of these maturities are rolled over, to ensure that, they are able to, significantly stave off any potential currency challenge.
All right, but looking at monetary policy, though, we saw the central bank held rates last week, and then there's an interview that cropped up sometime last week talking about the central bank giving guidance on the fact that it's not going to do anything on that until maybe inflation gets about 9% thereabout. This kind of guidance coming officially in the market, how does it?
Well, I think in terms of monetary policy, the CBN has basically been moving with regards to what it's been doing with OMO. If you want to get a sense of the policy leaning or posture of the Apex Bank, look at what it's doing with OMO, look at what it's doing with those rates. I think that's where the real issue is, not so much around, what it does with the benchmark rate, really. And that's why you've seen that benchmark rate stagnant for quite a while. It's done more in terms of its monetary policy posture and leaning with the OMO auctions and all of that. So with regards to its statements around, some sort of forward guidance to say that, they would only cut when we see single digits inflation, I think that's fair enough. If you look at the sort of forecast that we've got going on, I don't know that we're likely to see single-digit inflation anytime soon. If you look at what's going on with food prices, the border closures, and all of that, they will continue to put an upward pressure on inflation. So I don't see that happening anytime soon.
All right, then. Thank you so much for your contribution.